Hello and welcome. Today is the 30th of July 2017. My name is Derek and I want to talk about the Bitcoin chart crossed with the Brazilian real and talk about buying low, selling high, the importance of order books or your order books of your buy and sell orders in place. A lot of great buys in January and even at the end of June and July, and a great sell situation in May. But look at this big move, and of course you can see these two sell-offs at the end of June and July. But what's important to note is how did the Brazilian real react, and how do we explain this rally and even the sell-offs as they are occurring? And I will answer these questions, but let's first take a look at this is the cross. So we can see in here that it had a decent size gain. So it's probably important to note when this happened, because it could work in line, because this tells us when this goes up that the Brazilian real is losing value against the US dollar. So the time frame for this was on May 17th and 18th, which translates into in here a little before this happened. So therefore, the news of their currency losing value, something happened that day. Well, this explains people getting into Bitcoin. And from the point of their dollar falling and then of course recovering after that, this thing just went off big for close to a week. And notice it goes off big at around 8,000, moving up to 20,000. So within its currency, people were just buying it up, getting out of their currency into Bitcoin. Now this is on the U exchange. And what was going on is they were rushing in and buying for what it was more than it was worth, because at this point, if we do a switch over, how much was this worth in US dollars at the time? And the answer to that would be a little under 6,000, because the currency rate was about 30%. So 30% of 18, well then, well, 33% is 6,000. And they bought the market up really high. And of course, when a situation like this was to occur, a move like this is normal. So this is the free market. Oh, I didn't want to do that. I'm going to get this chart back up. Okay, so yeah, this is the free market that brought this higher. When there were people wanting to rush in, they were buying, and that forced people to, well, the sell orders would just get activated one by one. And then, of course, when markets get out of hand like that, it's got to price back to its normal corrections. Now let's talk about these cattails, if you want to call them such. And we can see in the start of the year and here a whole bunch of them that came into place over and over and over again. And if you think about the dynamics of placing your buy orders, trying to get in cheap and then sell it high. If you're selling the market in here, okay, I'm going to put a buy order here, even go here where you miss. See, they all get executed. This one, you're going to put a sell order. Well, might not get executed till in here. This one is going to get executed maybe here or in here. This one should get executed within this range. But when you're in the situations where, oh, this day, you put a buy order in wherever down here, and it gets hit, and the price goes back up here. Oh, I'll put a buy order back in. And if you manage to get this low, you got it the next day again. Then there's 2 days in a row where there was no excuse not to buy. And this one in here, hopefully you got a second or third order in. This one again. Now the sell orders weren't coming in at this stage in the same way. There was a little bit of selling opportunity here, but the whole run brought all of these orders into profitable situations, and these sales were able to be profitable or get back what you sold, at least in here. And even within this, when you have all of these, you have a buy order here, here, here. This is a spot where if you're to get this, you could have 5 buy orders get filled, and you wake up and every single one of them is back where it was the day before in the last few, the normal trading range. And you got 7,400, 6,500, 57, we'll say 51, and 47.50. And the price is at, like, we'll say 8,500 at the time. That's a sweet deal. And then if you sell and then you do the same thing again, you got the same result again, although you had to wait a little longer to get your cash back. But hey, not much longer. A little sell in here, buy in here. And well, of course, we'll wait, or you would be waiting for this point in here. But when you look deeper in that, if you look at the shorter term book, and before I do that, I want to explain these moves on how they happen. Then I'm going to go to this short-term time frame and show you another thing, how you explain it, just how you know what the market's doing and how you know how to profit on it. But we'll get to that. But how do these moves happen? Now, the only way that they should and usually do in the crypto business is when somebody sells everything they have down to a certain point. So here's some person worth a decent figure selling the market every single bit at once, usually. Yeah, I got like 30 Bitcoins worth on here, or whatever decent number it happens to be, 40, 50 Bitcoins. These market orders are definitely really thin, which allows for these types of higher moves like this to occur, and these type of flash moves also to occur as well. So therefore, that they do that. In your situation, it's like 86.50 when they sell it down, and they sell it down to like 46 or something. So now, after it's done, you got a bid-ask ratio of about 47 and still 86. And then all of a sudden, next thing you know, it's not going to take long before someone will buy at 86, because no one will be selling at these levels, not a single person. Buy orders will start to get filled, and then of course it gets bought in here, and then the markets will start trading normal as the normal buy orders will re-enter back in the market. That's normally how these play out. Now, whether this is some sort of misprint, of course, very easily can be, but a situation like this is more normal, more progressive. It's obviously a failed breakdown. Whether it becomes a fast move and or continues its range, oftentimes I'll say, well, oftentimes a failed move brings a fast move, and well, this might be the unoftentimes where it just continues going sideways within it. But definitely is something to look at. Now let's look at this on a shorter term time frame, and this is the 15-minute time frame, and you can say it looks like a cluttered mess, but if you look at how this book is, or how this price is organized, and how the book would look, the order book of the market that is, what you see is situations like here, 8,600, and yet it's just having this quick spike to 88. What that would oftentimes indicate is there is a large gap between the buy orders and the sell orders. So therefore, you'll have a situation where one trade will be done at 8,600 and the next trade will be 8,800. And there's only going to be so many trades that would take place when you have markets looking like this, especially when you see all of these not moving at all situations. But that's generally what that would mean. Like in here, you have 8,700 and 8,600 as what the bid-ask ratio is. So when you have these situations, what you want to try to do, at least what I try to do anyway, is get the best buys and sells within the price. Because if you can see a market's consistently got like an 86 and say a 90 ratio, and I've seen a lot, I've seen them go extreme. I've seen ratios that I've been able to play well going from 20 to 44. And I was able to play it good for a few days for about 3 or 4 buys and sells. But you have a situation, okay, so you try to get your buys in, place your order, and have somebody sell to you when you got your buy order for 86. So now you got your tokens, and now you put your sell order near this 90 number. You might be in a bidding war with other people, and if you do so, well, then you want to try to make sure that you can get that you're winning it, and you get the best price, of course, but you put your sell order in, and then you wait. And if you had a strategy in here where you see, well, right now you want to be putting buy orders in at 8,600, and you want to be putting sell orders in even at 8,700. If that's all you did from this point on, buy order 86, and then when you hit it, put a sell order in for 87, you're going to get so many hits. Even in here, you buy at 86, you're still, even though you didn't buy in here and you could have got cheaper, you're still selling. And you'd probably have dozens of back and forth gains. And in a situation like that, it's not that big of a gain, which is why I wouldn't do that type of ratio. That's only 1 basis point on 86. That's a little over 1%. And with rate, you're barely going over 0.5%. So you really wouldn't do it for that rate. But let's span this out to, I think it's a 30-minute time frame, and even earlier data, you can see how it is profitable. And this is going back to the 14th, around between the 12th and the 18th of July. And if you can catch the trend the quickest possible in here, then you'd be seeing how easy it would be to buy at around 4,900, and how easy it'd be to sell around 53-ish or so, 54. And now you're starting to talk about a 7-8% difference top to bottom, only taken, well, for me, I usually pay 0.2-ish to 0.25 on average, so it's about under 0.5% for me. I look at it. So if I'm seeing something that give me an 8% move, that's 7.5%. And then, of course, just the standard game where, say I have a buy order here, okay, you're going to place a sell order, say, here, which of course would hit this point. Then you got a buy order here. Say you put a sell order, well, either you're going to get it here or you're going to get it in here somewhere. You have a buy order here, and then look at this. And this is where you just get part of the game. You're not even trying to play the swing of these awesome candles that do stuff like this. But this, again, is because of the bid-ask ratio being out of hand. We can see just in this section here, from here to here, it supports around 5,000. Twice it resists south of 6, and then once it resists around 55. If you can find something like this, huge gains. And it all comes down to being alert on the trend, and alert and active on your buys and sells if you can, because you oftentimes, when you look at this, don't have much time to get your quick buy and sells back in, because if you're fast and you place your buy and sell orders seconds or minutes after they are hit, then you are able to get several order executions. This here is almost a gold mine. If you are able to get your buys in below and around 5 and get your sells in over and at 52. And then all of a sudden in this, you have you're playing that, you have a breakout. So next thing you know, as it's going higher, all of these buy orders are left in the dust. But all your previous longer term sell orders you have come in here. Like if you sell here, you're fast enough, you're already going to buy back in just a few periods right in here somewhere. And I'm going to end it now because I've pretty much now gone over what I want to. This is an extreme case, but it's obviously out there. If you're able to trade on the YOU exchange, then it's definitely available, as we can see here. Thank you for tuning in, and have yourself a great day.